Any reason to believe that this bond market, stock market correlation continues in the way it has done over the previous month, over the next 3 months?
Well, it's certainly possible. I mean, I think 2023 has shown us that anything is possible. So it's certainly possible that the correlation remains positive in the sense that we continue to see yields come down. Stocks are celebrating that, particularly growthier stocks, which I think is a rational move, at least initially. So I do think that the correlation could stay positive for a little while. What we're looking at here, especially into 2024, is that we've been wanting cooling in a lot of this data. We've been wanting the cooling in inflation. We've been wanting a labor market that gets a little bit more imbalanced. So we've seen some of that data, things like continuing claims on a steady move upwards since September. We know that the manufacturing economy is still feeling some pain. We're hearing data out of the consumer that they're pulling back on spending a little bit. So we've wanted this cooling. The question into 2024 will be, can we stop the cooling before the economy tips into contraction and makes us all nervous? If we start to get data that gets too cool too quickly, that's when that correlation between stocks and bonds breaks down, where I think you see bonds rally. So you see yields continue to fall because people got afraid, but stocks also come down in tandem.
What are your favorite sectors going into year end and beyond?
Well, look, as yields fall, I think for the near term, at least, tech stocks still can hold up well. This is also a period of time after the last hike and before the first cut that stocks tend to do okay. So I don't necessarily see a huge drawdown unless there's some exogenous shock. But going into 2024, I think that we need, if the bull case comes true, we need some broadening out in the equity market. I am still nervous about a drawdown. I am worried that we're going to get data that cools it too much. So I would be cautious in cyclicals. So I would still be looking at things like consumer staples. I think the utilities trade is okay. If you're looking for growth, but you don't want that rate sensitivity, I think healthcare is a good place to be. And I do think that we see a resurgence in energy stocks because supply will continue to get cut.